Evil Empire, laughing all the way to the bank.
Order filled.
Okay, so you just watched me give a live execution on my trade that I took yesterday. I am actually recording this on the next day because I got kind of swamped yesterday with work. But you just saw me. That was a live execution of this short that you're looking at right here on my chart. I took that on the Alpha Ticks account, so this is not going to have any executions on here while I'm giving you like a rundown of why I took it. But it does have my P&L box. I can show you everything and all the reasons why I took this trade. So just to get started, I took this trade in the PM session. It was right whenever Silver Bull was about to start, which has a little bit to do with why I took it. But first, let me show you all of the session highs and lows and the reason why I took this trade. Asia session high and low was both taken. London session high and low was both swept. And then we had New York high and New York low. So essentially when price does a seek and destroy kind of model here, anything after New York open, you're not really expecting to see any sort of like high probability move, like taking out a high or taking out a low. Like these two highs are probably protected, and the New York high and New York low are most likely not to get taken in the same session. You can see that this New York low didn't even get taken until 7 p.m. the next day. So I'm not looking for a big extension move. I'm looking for some sort of internal high or internal low to get taken, or even just an internal imbalance, which is actually what I traded to here. But for starters, we're going to note the lunch high right here that got created, and then the lunch low. These were my two targets. So in the sense of the seek and destroy model, where the top of a range and the bottom of a range get taken, you can see that lunch high had gotten taken, so I was expecting lunch low to be the next target for price. So after lunch high got taken, I was going to see what did the macro do, because the macro is going to kind of set up what Silver Bullet does. So we took lunch high. I'm expecting lunch low to get taken. Now I'm seeing that our lunch was our accumulation zone a little bit, and then regardless that the macro indicator here says that it was an accumulation macro, it ended up taking out the lunch high, so I see it as a manipulation. So I'm looking for that next distribution move to be a part of. So let's get rid of this indicator here. But lunch low is my primary target, right? So now I'm looking for some sort of higher time frame key level to get tapped into, a liquidity sweep, which the liquidity sweep in this situation was the lunch high because that was a significant level. And then I am looking for the key level to get tapped into. So on our higher time frame here, we had a larger 15-minute time frame inversion fair value gap that got created from from New York session. So this 15-minute got completely inversed and was just now being retraced back to and respected. So that was my liquidity sweep key level that got taken in the this was the inverse confirmation entry model, the ICE model, which is one of the models that I use. I have a few that I use, a few different checklists that I use when I get into a trade. So the first part of that was obviously the liquidity sweep, and then the key level that got tapped into. Now I'm looking for some sort of change in structure, price break of structure, inverse fair value gap, right? Those are like the three primary like indicators that price is going to reverse. So to start here, whenever we remanipulate the accumulation high that got taken, we created this 1 minute inverse right here, which is this red inverse fair value gap box. Price tapped into it, chopped on top of it for a little bit, and then quickly dumped right through it, closing through it, coming back up into it, respecting it, and then selling off super hard. So this large distribution leg here off of the inverse is a very strong indication that price is going to continue lower. So basically all we're looking for left on the ICE model that I'm trading here is just a secondary entry confirmation, because what the ICE model is you're looking for that liquidity sweep key level to get tapped into, and then some sort of inverse to confirm the reversal, which was this 1 minute inverse right here. So we have a reversal confirmed by price inversing this 1 minute, coming back up into it, and then closing out of it. And then you're just looking for some sort of secondary entry confirmation, which happened to be this large displacement fair value gap, or SIBI. SIBI just stands for sell side imbalance, buy side inefficiency, which is just fancy words for a bearish fair value gap. I was looking for some sort of secondary entry like this. So I was watching, I see, boom, fair value gap gets inverse. There's the first part. Second part, I'm looking for my entry. This displacement fair value gap, I entered right on the bottom of it. I think it got not as good of a candle fill. It was somewhere around that level. But that's where I was entered. And then you're going to protect structure highs. So, I mean, obviously whenever price comes through here, let me get a cool little brush out. If price comes through here, comes back up into it, and then closes out, that means that this high right here is a swing high. It's a protected high because it filled an imbalance and then closed out of it. So in terms of order flow, there's no reason that price should come above this high. If price is getting up here and reaching above this inverse fair value gap, it is probably going to reach for higher prices, and your idea is probably wrong. So that's why that is a valid stop loss placement. So I place my stop at the swing highs inside of this inverse fair value gap. I enter on this 1 minute SIBI going down. And next thing you're gonna be looking at is what were my price targets. So obviously we had this super big BPR that got created over here with price, which was, I mean, very high resistance liquidity. Those are usually not the best opportunities to trade against, which is why price kind of consolidated whenever we got inside of it. But we had these two equal lunch lows right here that were very high probability for me. And if you project the standard deviation from the candle swing that actually respected the inverse value gap and then got inverse through, which are these sequence of candles right here, if you project that on your standard deviation fib tool, you will see that the 3.5 to 4 standard deviation level actually lines up perfectly with the bottom of the lunch lows. So that just makes these lunch low targets even more high probability for me. With price being low probability where it's chopping up and down, you know, we've already taken out session highs and session lows for the other sessions. I actually ended up targeting this internal low right here, because there is always a little bit of a chance that price will come down, generate more equal lows, and then, you know, reach for higher prices without actually tagging me in. So I was perfectly willing to just take this 2 to 1 over this, you know, 2.6 to 1. It was an extra, you know, $50. An extra $50 you're gonna make, and that's just leaving more on the table, a higher probability that you're gonna get reversed on. And I'm not willing to get reversed on. I'd much rather take my profits and then leave. So I targeted the internal swing low rather than the external lunch low. But that's pretty much the entire trade that I took. Into there, you let it play out. Obviously, we get around that 2 to 2.5 standard deviation, and we had some accumulation. You expect that with price. I mean, I'm fully willing to see price consolidate here, but I do want to see it extend fully to that 3.5 to 4. And if you do notice too, after all this price, once we hit that level, we actually did just continue sideways until market close. So these standard deviations are true to play. If you want to learn how to trade standard deviations like this, obviously I teach it all in my Discord. The link will be in the bio of this video, or in the description of this video. But a couple things I want to go over with you guys is just basically where I manage my stop loss and where I would go break even. So first of all, where would I go break even at? So you can see over here, there's not a lot of swing lows to, you know, use as a break even level. So what I look for is the lowest imbalance in the leg that you're trading against. So on the 1 minute, the lowest imbalance is this one right here. This 1 minute fair value gap right here is the lowest imbalance where price can trade to, where it could still hit it and then reverse higher. So as soon as price hits this level, which it dumps to very quickly, I'm already moving my stop to break even. Now you can see price chopped, almost came back up to that break even level to stop me out, but it did not stop me out. If it does, I'm okay with it. I'm willing to let myself hit break even, and then, you know, sometimes it's going to run off without you. That's just what happens. You can't control the market. Price will do that to you sometimes, but that is where my break even level is, because that is the one opportunity where price could potentially hit it and then reverse for higher prices. So you always want to target the spot where price could reverse at. The lowest spot where price could reverse at. That's your break even level. Or not the lowest, the closest spot where price could reverse at. It should be your break even level. But, so that was my break even level. We would have entitled a little BE on it so you guys know what I'm talking about. And then essentially I was just de-risking my price basically throughout the entire trade. So yeah, so stop would have been right here at break even. We'll make it red for you guys to see. And then as we continue to chop price right here, we actually ended up creating this. We ended up creating a 3-minute sell side imbalance right here, which I will show you guys on the 1 minute. This 3-minute sell side imbalance that price kind of came up into, is respecting, and then closed out of. And while we were inside of this 3-minute, we created this 1 minute bullish fair value gap that ended up getting closed through right away. So as soon as price respects this 3-minute and then closes through this 1 minute, I'm instantly moving my stop to this high up on that 3-minute SIBI respection swing high. Moving my stop there instantly. We close through this 1 minute, come back up into it, respect it, and then close out of it again. Boom, now I'm moving my stop loss to that next swing high that was inside the 1 minute inverse fair value gap. So before my trade had even hit take profit, my stop loss was already $200 in profit. So, and you'll see that in the video. You saw that in the live trade already. But that is just the importance of moving your stop to break even and de-risking your stop as quickly as possible. But this is the whole trade that I took, a ICE model, sell model, and I hope this was insightful. If you want to learn how to trade just like me, I teach it in my Discord. We have free information. We have over 20 channels of free information, and then we have a mentorship that you can pay for, and then we have a trading guide that is $60 right now. Really good deal. The price is going up in the future, so if you want to get a hold of that as quick as you can, I highly suggest it. It'll take you from complete beginner to a professional trader in, you know, a couple weeks. Like if you, it goes at your pace. It's quickly how fast can you read this and apply it to your trading. All of that stuff is in my Discord. The link will be in the description of this video. I hope you learned something from this trading recap, and I'll see you guys in the next video.